that before. That was great. Thank you so much. We're going to try to keep the blood and guts to a minimum here today. I am an accountant, not in the medical field. But yeah, so we're going to talk about salty water. So SALT, as Mark mentioned, is an acronym for state and local tax. Got my little salt shaker up there. We're going to try to make this a little bit fun. This can be really dry, and we're going to try to keep it not so dry today. So pretty excited to be here. Thank you very much for having me. And if you don't already know everything you needed to know about me, there's a little bit more. These are some of my brags. We started our firm in 2002, so this is the longest job I've ever had. I was with Big Four Public Accounting, but I've been doing this for 14 years next month. I can't believe it. So we do specialize in multi-state. I'm going to talk to you today about Nexus. We're going to talk about taxability. We're going to kind of shake it up. You're going to see, we're going to talk a lot about sales tax. And the reason we're going to talk a lot about sales tax is because that's the first thing that a lot of Silicon Valley companies trip into. So, you may not be making taxable income for income tax purposes, and so that may not be as big a deal for you. Or your CPA firm may have that totally handled. But the sales tax piece is a little bit trickier, and so that's what we're going to focus on mostly today. And here are some of the topics. And I've got an hour, roughly, to teach you everything I know about state and local tax. And I'm not going to be able to do that, but we're going to see if we can give you a good primer on these things. Yes, ma'am.
Slides, or should we take a picture if you want?
ASL has the slides, and I think they'll send them out to you all. Is that correct, Mark? Okay.
Yeah, let us know if you would like us to.
Yeah, you're welcome to distribute the slides.
Right.
Yeah, absolutely. I'm happy to share them. But also feel free to take pictures of any that you like. There's some really cute pictures of my dogs up here, so if you that's what keeps it light. All right, and I mentioned we're going to talk about brief history and introduction because history is what kind of shapes us, and it tells us what we're doing in the future. And we're going to have some interesting things about what's going on today by the history of the state tax world. So hopefully these are some things you came to learn about today, and we're going to let it rip here. All right, so when we talk about sales tax, most of us, I think about going to the store and having to pay the sales tax, right? So it's not that hard. How hard can that be, right? I go, they assess tax. But what we're talking mostly about today is from the business owner side. So now I'm on the side of having to assess tax. And again, seems pretty easy. If I'm in the business of selling widgets and I'm at the widget store, these things are going to be taxable, right? If I have my bricks and mortar location and I sell widgets, we're going to apply sales tax to that. Easy enough. But what about, let's say I'm in the widget making business and I've got my widget store and I've got a lot of different widgets. And one day, Mark comes in and says, Monika, I'd like to buy 18 cases of widgets, and I'm gonna resell those. So I'm gonna give you a reseller certificate. So I don't want you to charge me sales tax. Okay, well now my life just got a little bit harder because I used to charge sales tax on all the widgets I sold. So I might have to deal with that issue. Or what if I'm not a widget seller? What if I'm Subway? And you come in with your $5 because you want to buy a $5 footlong, right? And all you got is your $5. If you come into my Subway and you buy that $5 footlong and you take it to go and you want it cold, you don't want it heated, you just want me to make the sandwich and send you on your way, then it's $5, no tax. But if you want me to heat that, you want me to add a little cheese to that and throw it in the microwave and heat it up for 20 seconds. Now it's heated, and oh my gosh, here in California there's sales tax on that, so I'm going to charge you sales tax. So, but you have a lot more enjoyment, so you're willing to pay the 45 extra cents, right? Also, that cold sandwich, if you decide to eat it in my store instead of to go, yeah, I'm going to charge you sales tax on that too. So now the sale of my $5 sandwich just got a lot more complicated. And so those are the things that we deal with and some of the things that we're going to share with you. And I have some people looking in like they might want to come in. I don't know. All right. So excited. Yes, sir.
So I just want to make sure I understood that. So you're saying that if the sandwich is to go,
regardless. Well, no. If it's heated to go, then you're in trouble.
If it's heated, then you charge tax, even if it's to go regardless.
Correct, because now it's prepared food.
I see.
Yeah. But wait, there's more. There is an exception if you're a bakery and you heat a croissant, then that's not taxable because there's a special exception in the law for bakeries. But
versus
do you see why I have a job? This is fun stuff, right?
Like a cold meatball sandwich. It was prepared before, now it's cold.
Yeah, if it's cold, as long as it's cold, it's good. But if I throw that meatball sandwich in the microwave for 2 seconds, yeah, then you're paying sales tax again. Yeah.
So
Welcome to my world.
So only if it's warm at the moment that I'm taking it out the door?
Yes. So I actually deal with that. So I have a client that's delivering stuff. So it's warm when it leaves, but it might be lukewarm when it gets there. Now what?
Yeah, now I don't want to pay tax.
Yeah, I know. I'm telling you. So it's common, but it's fun. There's a lot of good stuff. So we're gonna talk about some of those things, right? All right. Here's why we talk about it a lot. It's prevalent because states need revenue. Okay, California, we're broke. We're broke all the time. We're not broke right now, I don't think. But are we broke right now? I guess. I don't know. But states need revenue. Every state needs revenue, and a lot of it comes from sales tax. So this is something we talk about it because of that. Also because increased online transactions. So it used to be a whole lot easier when you could just walk in my store and buy this widget, right? I had a bricks and mortar location. You came in, you bought my widget. I charge you sales tax because that's the law. Well, what about if you're buying it online? We're going to talk a lot about that because that's a hot topic. But again, it's going to depend on where you have a taxable presence. So in that example, you might be selling widgets online. And if you're based here in California, you might charge me you're going to charge sales tax on the sale of this widget. But if instead you're selling it to my mom, who still lives in El Paso, Texas, but you don't have a taxable presence there, you're probably not going to charge her sales tax for the same widget. So interesting stuff going on there. Also, it affects a lot of smaller companies now because they're quicker to get to market because of online transactions. So you've got a whole lot more people entering the fray. And I mean, it's not like this is like something that just happened yesterday. I mean, ever since we've had online transactions, so the last 20 years, there's a lot of interesting stuff that's been going on with this. So this is why we talk a lot about sales tax and why there are folks like me out here that have a specialty in this. Not just because of the sandwich issue. All right. So I'm going to touch very briefly on history. So if there's any attorneys in here, I'm going to apologize. I'm not an attorney, and I'm not a constitutional lawyer. But most of the stuff we deal with goes back to the US Constitution. And then the rules, the state statutes and regulations that each state promulgates. So my husband grew up in the federal tax world, and so I always tell him, well, I'm way, way smarter than you because you only had to deal with federal tax. And me, I got to deal with 50 states. But most of this stems from federal legislation, and then each state has their own state statutes and regulations that they write. So it's interesting stuff. And then the US Congress has rights under the US Constitution to promulgate some laws. They haven't. They don't do much in the state and local lawmaking business, and we'll talk a little bit about that. And then US Supreme Court cases. So the Constitution is then interpreted by the Supreme Court, and they have some cases. And there's not very many state and local cases. There's one big one that's called Whewl that we talk about. There was a case from 20 years ago, and I'm going to explain to you why that's still relevant today and some ramifications about what's going on with that. So the history it can be interesting. Part of what we're going to find with the Constitution and what's going on in Congress is because of all the internet activity, states are getting less and less money from sales tax revenue. And so they're out on a money grab trying to get more. And the way the Constitution has laid things out and the way the Supreme Court case that we rely on basically restricts the states from getting any more money. So a couple things need to change. Either Congress needs to pass a law that says, okay, we're going to override that Supreme Court ruling from several years ago, or the Supreme Court needs to rehear it, or some other stuff needs to change. So it's a really interesting time for those of us in this area. So, all right. So let's talk a little bit about introduction. So sales tax and the complementary use tax, we'll talk a little bit about use tax in a minute. They're imposed by state and local jurisdictions. So each state has their own laws for the privilege of selling tangible personal property in the jurisdiction. You might ask, what about services? Some services are also taxable. More and more states are taxing more and more services. There are 45 states and the District of Columbia that impose a sales tax at the state level. So a lot of this going on. Anybody take a guess as to the 5 states that don't? This is always fun. I usually get about 3 of them.
I know there's Texas and Oregon.
Texas and Oregon. One is right. Oregon is correct. Texas does have a sales tax. They just don't have an income tax. They call it a franchise tax.
Oh.
All right, so we got Oregon. Anybody else? Who? Nevada. Nope, Nevada doesn't have an income tax.
Florida.
Delaware, yes. Delaware, Oregon? No. There's an acronym. It's ODAM.
Texas.
Oregon, Delaware, Alaska, Montana, and New Hampshire. There's too many new states, but yeah, New Hampshire. So not states that we deal with a whole lot, quite frankly. I mean, anyway, but there's your trivia for the day. Okay, talked about tangible personal property. It's something that can be perceived by the senses. I can touch it, I can smell it, I can feel it. This is tangible personal property, right? Clearly. This tangible personal property. What about software? Tangible personal property? You can perceive it by the senses, right? Most states would argue that software is tangible personal property. Yeah, interesting, right? Here's some wows. Okay, here's your general rule. Every now and then I'm going to ask you to remember a general rule. In general, unless there's an exemption, sales of tangible personal property are exempt. Are subject to sales tax. Let me try that again. In general, unless otherwise exempt, sales of tangible personal property are subject to sales tax. So in my previous example, this widget, going to be subject to sales tax, unless there's an exemption. My discussion about Subway. There was an exemption for food. There's a food exemption. I mean, if you go to Safeway and you buy apples, those are exempt as well. There's a food exemption. But there's not an exemption for heated food. So that's where it was tangible. Yes, ma'am?
So only AT&T Wireless charges money, but tax, but Comcast Cable does not charge tax.
I don't know the answer to that question at this moment. I'm not sure. There's a lot of there's telecom communication taxes, which are different than sales taxes. So, I mean, it's been a long time since I've looked at a bill, but yeah, there's different kinds of taxes for telecommunication companies and cable companies. So it may not be a sales tax, it may be a telecommunication tax you're looking at. So yeah, but yeah. Okay, all right, so tangible, gotta be tangible. And if it's tangible, unless there's an exemption, we're gonna pay tax.
So,
Yes, sir.
so are you saying that like everybody that sells things on eBay is supposed to be collecting the sales tax, paying sales tax? That's personal property.
It is. We're going to talk in a moment about Nexus and having the taxable presence in a state. So yes, if you're in California, if you're based in California and you're selling to California customers, in general,
Not
you're going to be charged.
necessarily. So if I go on eBay and I do it, I use it once,
Mhm.
it's not my business, and I sell my old iPhone
Mhm.
on eBay.
One time.
Sure, one time.
Okay.
Do I have to collect sales tax for that?
You might fall under the occasional sale exemption. So if you really only have one or two occasional sales, like if you have a garage sale at your house, one time, you don't have to collect sales tax on that. So the one time you sell your phone on eBay, you may be okay. But as soon as it becomes 2 or 3 times, now you're a retailer. What's good? It's fun stuff, yeah? All right. What about services? Okay. In general, so my general rule on if it was tangible, you are generally going to have to charge sales tax on it. In general, services are going to be exempt unless they're specifically enumerated, okay? And this is where it gets fun because the different states look at services different ways. My favorite is Texas, not just because I'm from there, but because they've got some interesting rules. So Texas taxes data processing services. Okay, what's a data processing service? SaaS software apparently falls under data processing services. So interesting. What about CPA type work? No, not really. It's not really data processing. We're still professional services. But this is where it gets really squirrely. And more states are trying to reach out and grab these things. So they're expanding their definitions in the services world. So used to be, we really did only look at widgets. And now we're looking at services. Especially here in the Valley, there's so many things that are in this intangible space. I mean, so many things are in the cloud nowadays. And each state, the states are trying to figure out what to do with that. And I talked a little bit about the history. So when you think about, you have to follow a state's laws. So many states don't talk about things like SaaS. I mean, they've started talking about software because, okay, it's been around for a long time now. But software as a service, things in the cloud. I mean, they still think the clouds are the white fluffy things, right? And so we have to interpret what those laws are. So sometimes they write regulations. Well, regulations are, kind of down here as far as, do I have to rely on them? And then the different courts in those different states interpret those laws. So it's an interesting place. So suffice it to say, though, states are increasing the number of enumerated services that are subject to sales tax. California, by the way, is looking at expanding taxability of services to include CPAs and professionals. So I don't know if you guys go to Capitol Hill, it's not Capitol Hill, Sacramento. You go to Sacramento every now and then, but every year the Cal CPA sends a contingent of CPAs to the Capitol and says, wait a minute, we don't want you to be taxing our services. So, you know, I'm hoping that sticks around for a while, but it's interesting because what's happened is the tax base has eroded. And if you give me 1 second, I'm going to get to your question. But what has happened is if you think about just the economy, 5 years ago, maybe you would go to Best Buy and you'd buy a CD, right? So you'd buy your music CD and it cost $20 and you would pay the state of California the tax on that. And so California would get that. On the same trip, you'd be buying gaming, you'd be buying, you know, off-the-shelf software, you'd buy QuickBooks, right? So on my one trip, I've bought music, I've bought games, and I've bought QuickBooks, and I've paid tax on all of those things when I bought it at Best Buy. Now fast forward to today, I can't remember the last time I bought a CD, right? I download everything, Apple iTunes, not taxable in California, because California says we don't tax digital downloads. So they're, you know, I have the same enjoyment on that music that I did 5 years ago, but I didn't pay tax. QuickBooks, you know, I don't buy it anymore. It just downloads, right? I hit go and pay the money and they take my credit card and now that's on my computer. Once again, digital download, not taxable in California. So California didn't get their money. So in the last 5 years, multiply that by 30 million people, or 20 million, you know, if you leave out the kids. California's gotten a lot less money. And so they're looking to expand in other areas. Other states, though, this is what we'll find, do tax some of those things. So electronically downloaded goods and services aren't necessarily exempt in every state. They're exempt here right now. I think that's because we have a large tech sector here, right? We want to be friendly to the tech folks. And so we've passed some of these laws. So, yes, sir, you had a question.
So Netflix and Hulu, HBO and iTunes, they could all be different in different states?
Correct. That's why I have a job. I know those are truly, that's how I make a lot of my living, right? Is sitting down with a customer and saying, okay, where are you taxed? Where are you? Where do you have people, places, and things? We're going to talk about that in a minute. What is your footprint? And then what are you selling, right? Again, it's easy if it's a widget, but you're selling Netflix. Okay, well, some of it's, are you selling that stuff? You're just renting it? What are you doing with it? And so we look at the laws then. And then the next step is, are there any exemptions? So,
Blockbuster had sales tax when you were renting a video.
There's a lot. Often there's tax on rentals. If you think about leasing a car, if you lease a car, the rental stream or your lease stream, they're charging you sales tax on that as well.
Right. So it's not just SaaS. What about Uber and Airbnb? Those are clearly taxable.
Uber, I don't think is. That's still a service. Airbnb's got issues with hotel taxes and that kind of thing. So yeah, no, but those are all really good questions because everybody is the new Uber of whatever. I get those calls all the time. We're the new Uber of Home Depot. Like, what does that even mean? I don't even. But I had that question the other day. Yeah. Okay. All right, so great segue. I did not plant this gentleman in the office, but this, or in the seat. This is all my intellectual property right here. So if you memorize this slide, take a picture of this slide, you can give this presentation. You don't need to know anything. I mean, this is all everything I know. This is a state tax quick decision tree. All kidding aside, the first question is, do we have nexus or taxable presence in a state? We're going to talk about a little bit more about that in just a second, but that is taxable presence. Am I in the state? Do I have a footprint there such that the state can reach out and say, hey, Monica, you're in my state enough so that I can charge you tax or ask you to collect my sales tax. Then, okay, let's say I have nexus in the state. What is the taxability of the product I'm selling in each of those states? And then, are there any exemptions? And if we get down to here and we say, yes, we have nexus, yes, it's taxable, no, there are no exemptions, then maybe we get down here to where we register and file. Most of the time, yes. Sometimes we look at, okay, is it really material, and do we really want to suddenly be filing in 50 states? Those are other things I do with my clients, is sit down and say, okay, here's if you were to cross all the I's, dot all the I's, cross all the T's, you might get to taxability, but when you look at the situation, you might be collecting and remitting for $100 of sales tax, and at some point you might say, okay, you know what, we'll hold off on the little ones and we'll deal with the big ones first. Because there's 50 of them, right? 45, there's 45. All right, nexus. What is nexus? We talk about it all the time. It's a sufficient connection that an entity has to have in order for the state to be able to impose a tax. So I can't just look in the direction of Texas and they can tax me, right? I have to do something there. And usually we talk about physical presence. We've got these cute little feet here, but it has to be physical presence. Physical contact between the taxpayer and the state has to occur. And again, this is what is defined by the US Constitution and interpretations of Supreme Court cases. So Nexus is going to be important. We're going to talk about Nexus for the rest of the afternoon. All right, taxable presence. Here are some examples of taxable presence. And you'll note that they're all about boots on the ground or stuff. Do you have stuff in a state? Do you have an employee working or living in a state? It doesn't have to just be an employee. It can be an independent contractor working on your behalf. This is where people get tripped up a lot. I get a lot of questions on this. Oh, I didn't have an employee. I just have independent contractors. Okay. They usually give you Nexus. Soliciting sales in a state. Okay, so I have a sales rep that lives in Texas, and their territory is around Texas. Okay, so you've got Nexus in Texas. You have probably Nexus in Alabama and Louisiana and New Mexico and Arizona if that's part of his territory. Well, Monica, what if he only goes there once? What if he only goes into New Mexico one time a year? Okay, probably not enough to give you Nexus. What if he goes into New Mexico one time a year and he makes $1 million sale of this very fancy widget? Well, New Mexico is probably going to say, well, you've got Nexus in our state. So a lot of this is gray, right? It does, right? We like it. We like when people have to. No, I'm kidding. But yeah, so these are the things that cause heartache for people. And this is what we spend a lot of time working with clients on. What is enough Nexus? Yes, ma'am.
So what if you have a sale in your home state, for example, California, but the delivery of the service takes place in a different state?
Is it a delivery of service or stuff? Is it a widget or is it service?
Service.
A service.
So can I give you the example?
Only if it's fast, yes. Sorry.
I do destination retreats for my clients, and so I make a sale here, and then we go there.
Right.
And but I don't
If
sell anything there.
If it's taxable, it's probably taxable there, okay? But retreat type services are generally in that bucket that aren't going to be taxable. Now, while you're there though, if you sell like really cool CDs about how to, now you've got a problem. And you're selling books, you're selling cool books and CDs, and now we should talk. All right, ownership of property in a state. So you don't just have people, you've got stuff. You've got inventory in a state, potentially. That's a good one. Here's one for you. So I have a lot of clients that do technology stuff, right? And let's say they have a cloud product that operates in the cloud. But in order for that to work, they have to have these little transponders. See, these are great. This is good for. So, and they require every client to have a transponder. Each of their customers has to have one of these. So the software and the SaaS and whatever costs $10,000 a year, right? And this little gizmo costs $40, right? So they can sell this, and now they sell it. Okay, now we have to deal with is it taxable? Worse though is if they rent it or they lease it. So it's like, think about your cable box, okay? Excuse me, I have this example right now. Client's like, oh yeah, we put a box everywhere. Okay, did your client buy that box? No, the client leases the box, okay? So what that means is that my client still owns it. So they own property in every state that they've got that transponder. So guess what? Now they have Nexus everywhere. I'm like, bad answer. Sell it, right? Sell it everywhere. Don't lease it. Right? I used to have a client that they did water purification. And so it was like this osmosis water filtering under the sink, whatever. And they gave away these things. They didn't even lease them, or maybe they leased them. But it was so small. It was like this little thing, and they leased them out to people for $1 a month or whatever. They had ownership in every state. Yuck. So rental of property as well, and participating in trade shows. It depends on the state. Some states have an exemption for this, so if you participate in the trade show, you just go for 4 or 5 days. It doesn't create Nexus. In some states, it does. And as long as you're just participating, usually you have an out. But if you start selling things at the trade show, that's when things get complicated. All right. Let me give you some examples. They're going to get a little bit harder. Nexus example number 1 here, pretty easy. Acme Company's headquartered here in California, has an employee and offices in California. we have Nexus in California, right? All of you and your businesses, you got Nexus here. You're here. Hello, welcome to my state. Okay, now, let's say instead that Acme here in California, they send Charlie, a salesperson from California, into Nevada to call on the company's largest customer twice per month. Once again, twice a month, that's clearly going to exceed the Nexus threshold, and so Charlie has created Nexus for Acme in Nevada. And what does that mean? That's when Charlie goes to Nevada to sell his widgets, he now has to collect sales tax on them. Fair enough. Example number 3, this gets into my example of the leasing. You have a technology solution to provide a product that works in the cloud. However, now you have to have this transponder box, which is everywhere. And you've now created Nexus anywhere that you have that transponder box. Yes, ma'am.
So if we have a Nexus, but doesn't mean to pay income tax, right? We just need to pay sales tax.
Well, no. You also generally have to have, once you create Nexus for sales tax, you generally create Nexus for income tax as well. There are a few exceptions. If all you're doing in the state is selling tangible personal property, so if all I do is sell widgets, you know, kind of back to this guy, if all he's doing is selling widgets in Nevada, and they're delivered from outside the state and whatever, I might not have it, well, Nevada's a bad example because they don't have an income tax anyway, but you may not have Nexus for income tax purposes there, but you might. So oftentimes if you're tripping into it for sales tax, you also have it for income tax purposes.
In that example with Charlie, so is Charlie going to charge the customer the sales tax rate for California or Nevada in the city that that customer is located?
The latter.
Okay.
Nevada. Yes, sir. Yes, sir.
In the Charlie example, you had mentioned clearly exceeded the Nexus threshold.
Yep.
So how do you determine that?
Well, my example was easy. Twice per month. So he's going there 24 times a year. He's exceeding it, right? It's largely subjective. So sometimes, and I don't have the law of Nevada in front of me, but it's usually, the law is usually written something like, as long as you're availing yourself of the services of our state. And so he's clearly going there. He's got a customer. He's going there regularly. Some states actually say if you come into the state 5 or more times or 3 or more times. It depends on the state, though. Not every state lines it out this way. So it would be nice if it was that easy. Yes, sir.
Do you get involved in these sorts of issues to exclude income from your income tax? An example is, so we are in California, we're an insurance broker, we have clients in Nevada, we have an office in Nevada. So could we create Nexus in Nevada to exclude income from our California taxes?
Yes.
Get involved in those sorts of issues?
We do on occasion, yeah. You have to have very good documentation in place to make sure that, you know, all your I's are dotted and your T's are crossed in that example. Yeah, we do. And there is still some planning for some of that, yes. Folks do it here all the time. You know, I'm moving to Nevada. I'm moving to Incline Village, right? Okay, great. But, you know, people do it on the individual side. Sometimes they ask for planning around that. You know, okay, I'm moving out of California. Great, I'm moving to Incline, but my kids still go to school here. I still register a car here. I still vote here, but oh, by the way, I live over there. Okay, California is not buying that. But to answer your question in general, yes, we deal with some of the planning with some of that. Yes, ma'am.
I don't want to jump here, but are you going to be talking about a build to and a ship to location later on?
A little bit. We're talking about sourcing a little bit.
Okay, because let's say we do sell to a customer,
Mhm.
and like we send the bill to a different place where their finance is headquartered.
Right.
The user is elsewhere, or the department ordering it elsewhere, but we could have users in different states. How would you tax that?
So the general answer, and the answer is always it depends, but the general answer is that you're looking to the ship to state, not the bill to state, right? So it's where you ship it to. And if it's a cloud-based,
Right.
now you're in a whole another can of worms, because if you know, so if your customer can tell you, okay, listen, I know you ship, you know, in theory it's shipped to, right, because it's in the cloud, but if your customer tells you, well, listen, you know, of the 100 seats that we're buying, you know, 50 of them are used in New York and 50 of them are used in Florida, you know, then we have to go, okay, well, do we have Nexus in Florida and New York? And if so, you know, can we apply the tax that way? And you can, but wow, you talk about an accounting nightmare. This is where this stuff gets unfun. is if you're the person that has to deal with all that.
Okay.
Yeah. All right. Any other questions? We doing okay? Stretch break? Okay. All right, we're moving. Okay. Now what? Now you have Nexus. So now the seller is obligated to collect sales tax unless there's a specific exemption. And if you are doing enough there, you also are required to deal with the income tax laws in that state. All right. So what are some exemptions? These are some of the exemptions that are out there due to the nature of the buyer. So if I'm selling to the United States government, there's exemptions for that. In some states, if you sell to the state government, there are exemptions. Not in California, right? Hello. Yeah, if we sell to the state, too bad. Due to the nature of the buyer. So the nature of the buyer might be I'm sorry, I got those backwards. The nature of the buyer is the federal government or state government. Due to the nature of the seller, tends to be like if you're selling for resale. So if you do a resale exemption, there's some resale exemptions, those kinds of things. The nature of the property or service transferred. So I mentioned food. There's food exemptions. That's sometimes exempt. In the high-tech world, we deal with medical device companies on occasion. And so in some states, those medical devices might be exempt. In other states, they might not. And you have to be really careful state-by-state exemptions as well. So there's not like a blanket of exemptions. There's things that tend to fall in. In most states, there's a food exemption. And in most states, there's some medical exemptions. But not every state has the same rules. And then intended use by the purchaser, that gets into things like, again, if you're going to resell something or if you're going to use it in an exempt activity, like education sometimes falls into that as well. So some schools, that kind of thing. Yes, sir?
So for the food exemption, is water connected to the food? So I'll use that as an example.
Sure.
In the food exemption, if I sell this to somebody, they don't pay tax on it because it's food. Is that what you're saying?
Correct.
Okay. If I sell it to somebody, but they're not using it as food, they're not going to drink it, they're going to use it, they're going to water their plants with it, whatever. Is it still considered a food exemption if they're not using it for food?
Yeah. Yeah. I mean, you don't necessarily have to ask what they're going to use it for.
But what if I
We might want to talk after class. Yeah. Well, there are some, there's some things about good faith exceptions. I mean, yeah, but yeah, no, for the most part, I mean, if you're buying a, case of water, I mean, I'm not going to ask what you're going to do with it.
But if you're taking a food item and making a product out of it, it's no longer a food item.
Right. So when you turn around and resell it, like if you do something with that water and you resell it, by the time you resell it, it may not have a food exemption anymore. Maybe that's what you're getting at.
Battery business, for instance, and uses, that to replace add water to, and that's his business, then isn't there some kind of obvious thing that says based on the nature of his business, it's reasonable to assume that it's not a food?
It's not reasonable to assume anything in sales tax. Start with that premise. But no, again, it depends on if you're an exempt type user, like you're the government or you're a school. I mean, there might be some reasons why you're exempt entity. So there's a number of exemptions, and I don't want to get into too many of them right now. This could be a long discussion, but suffice it to say there are plenty of exemptions out there for different things. But I'm happy to chat with you offline if you've got a specific question. Okay. Exemptions are important. Most of the time, there's a piece of paper involved with that exemption. Not always. So if you go to Safeway and you buy a few apples, there's not an exemption certificate. But if you are, if you're buying something like for resale, or you're a school and you say, well, we don't have to pay tax on that because we're a school and we're exempt, you give the seller an exemption certificate. And again, those vary by state, but you want to make sure you have them. Okay, always keep your documentation. And if you're the seller, you're the one that needs to maintain this. So be really careful that you maintain documentation. I'm dealing with the State Board of Equalization on like 5 different audits right now. And all of them, the auditors ask, I mean, they've got a checklist of things they ask for. So this is where a lot of people get tripped up, is they don't have the right documentation. So that's something I'm going to harp on a little bit, is you always have to keep your documentation. If there's an exemption certificate required, have it. Even if it makes perfect sense that you would be a reseller, have that documentation, because the burden of proof is on you. So, okay. Here's another quick one. The biggest sin that somebody can commit in the sales tax world is if you collect it and you don't remit it. So what happens here is somebody comes to a seminar like this and they're like, wow, Monica, we learned a ton. And oh, by the way, we're going to start collecting sales tax. Great. Okay, and now what? Now what do I do with it? Now I've got it in my hot little hand and I have to do something with it. So you probably should have thought through first, okay, am I going to register and get all the ducks lined up before you collect it? Sales taxes are fiduciary in nature, so this is where people go to jail, right? They're like, yeah, we've collected $50,000 worth of sales tax, now what? Get rid of it, hot potato, right? You don't want your corporate, your officers to be in trouble for this. And my guess is some of you are corporate officers, so you don't want to mess this up. Okay, let's talk briefly about interstate sales issues, or internet sales issues. And I'm going to talk real quickly about this Whewl case, because you will read about this in the newspaper every now and then. So Whewl was, well, first of all, this case is from 1992. It hit the Supreme Court in 1992, so this was actually in the 80s. And so Whewl is still around. They're an office supply retailer. Back in the day, they had locations in California, Illinois, and Georgia, and they had no employees or any other offices. And the way they did business was they sent catalogs to customers in many, many states, including North Dakota, which is the state at issue. And so North Dakota basically said, hey, listen, you're sending catalogs to all our residents, and it's filling up our landfills and whatever else. That creates nexus, because you've got property in our state. Right? All right. That case went all the way to the Supreme Court. North Dakota agreed, and they were like, yeah, that's all good. And then Whewl said, no. And it went up through the various whatever. And finally, the Supreme Court, the U.S. Supreme Court ruled on it. And they said, no, a business has to have substantial physical presence, nexus. So it has to be substantial. And those the catalogs are not substantial. I mean, they're just not. And during the case, Whewl argued things like, wow, it's a real pain in the neck. I mean, if we had to collect sales tax in all the states we send our catalogs, it would be a huge compliance burden for us. And Supreme Court, it's a huge compliance burden. So we'd have to know sales tax rates in all those different states, and it's just crazy. And Supreme Court said, you know what, Whewl, we don't really care if you have a compliance burden. We're not going to rule on whether you have a compliance burden or not, but we're going to rule on whether or not it's sufficient nexus. Oh, and by the way, we're going to let Congress decide if there is a burden on that. So. Hello, thank you. We all know how functional the Congress is, right? So you have to have, so this is where the law comes from that we're talking about all the time, where you have your boots on the ground, you have to have nexus before a state can impose tax. 1992. Why do we still care? Why do we still care? We care because back in 1992, it was before Al Gore created the internet. And we all used to go to the stores to buy these things, right? And now, we can buy them online. And so, again, like to my example of going to Best Buy, suddenly there's a lot less sales tax being collected because people are buying it online. And so people care about the fact that physical presence is keeping the states from collecting sales tax, right? So that's a big deal. And the states are like, well, wait a minute, we just want to start collecting. Like, can't we just, Monica, if you start selling widgets into Texas, well, Texas will just start collecting sales tax on that. We know where the sale's going. We're like, no, because Whewl says I have to have physical presence there. So this 20-year-old case is causing everybody havoc. The states don't get enough money, and retailers are running amok if you talk to different people. So interesting time, right? Yeah.
So what was it that happened with Amazon that they all of a sudden had to collect sales tax? And did they have a physical presence in every state?
They did not. What happened is they started negotiating with states. So states started passing click-through laws, and I actually don't have that on here because it was beyond the scope. But states passed laws that said, okay, listen, if you click through like on somebody else's website, so if I have a nice little banner on my website that says, shop here, the states were passing click-through laws, and they're still out there, that said, hey, if you have an agent in the state that's doing this, then you've got nexus. So in theory, in that scenario, I would have created nexus for Amazon. And I do here in California now. What Amazon did, though, is they went and they negotiated with a lot of different states, and they have income tax issues and everything now, too. So Amazon has changed. I mean, when I used to do these slides, 10 years ago, it was a lot different. But Amazon has negotiated with a lot of states on these click-through. But they've made it difficult for everybody else. So, if somebody from, Texas puts a banner ad on my website, I still create Nexus for them here in California, because California says as long as at least $10,000 of sales come from that, I've created Nexus.
And a banner is considered physical presence.
If you can click through it to generate revenue.
Wow. And a catalog isn't, but a mouse click.
Telling you, it's interesting stuff. It's good stuff. But yeah, so here is where we still are. If you think about it, though, I mean, the internet's just one big catalog, right? I mean, it's the ultimate catalog. It's the ultimate electric catalog. All right, so let's use an example real quick. Example. Susie resides in Texas, receives a catalog from Sunglasses Galore and selects the pair to order. She reviews the order form and notes in the fine print, customers in California, Florida, and Illinois must add sales tax. She's like, I'm living here in Texas. She happily sends her order form and feels like she's saved the sales tax. Yes, she has. Everything's good. Okay? Has she? No. Why? Use tax. Right.
She clicked through to get the catalog.
Susie is supposed to, on her individual income tax return, say, did you order anything from out of state? Yes. Okay, remit tax here. Interesting thing here, though, we said she resides in Texas, so she doesn't have an individual income tax return because it's Texas. All right. Same stuff online. Okay, so now instead, she resides in Texas. She goes to sunglassesgalore.com and selects a pair to order. I mean, this is all the same, right? She reviews her bill, and once again, not charging sales tax. She's happy. She feels like she saved the sales tax. Here is why we talk about this a lot. So use tax. If you are not charged, and this happens for businesses too, if you are not charged sales tax, and you probably should have been, or maybe not you should have been, but you bought something, you should remit the use tax to the state. California has a way for you to do that as an individual. And as a business, this happens sometimes too. Let's say I order a file cabinet from a company in Illinois because their prices are lower than mine, or lower than something here. Well, I've got to pay use tax on that. So California is going to come calling and say, hey, you need to remit your use tax, complementary tax, paid by the purchaser directly. Part of the problem is it's much harder to collect from all these different people. Think about Amazon back in the day when there was just books. You know, they were shipping books everywhere. Well, did all of those people remit sales tax? Heck no. Here's why this is a problem. This is why this is a problem. This is from data, estimated data from 2012. Sorry that it's so old, but they only do this every now and then. This is uncollected use tax. This is all the Susies of the world out there that are buying things online that are not collecting. This is a one-year amount. $4 billion in California. Don't you think Uncle Jerry would love to get his hands on that $4 billion?
It says trillion.
Billion.
No, but it says
What's 4.1
4,100 billion.
billion?
Is it 4.1 trillion?
Oh, okay. I think it may be 4 billion.
It should say in millions.
You're right. I'm sorry. Okay, I think it's 4 billion though. You're right. You're absolutely right. I'm sorry. My bad. You're the first person that's noticed that. I've been using the slide a lot. Thank you for that though. All right. $4 billion. Whatever. It's a lot of money. But you're right. You're right. So and this is since this is 12. Okay. And these are estimates because we really don't know how many people are not reporting. But you know they've got revenue numbers. Yes, sir.
How is use tax different from sales tax?
The only way it really differs, I mean, the quick answer. The quick answer is that it's really just who's paying it, right? So if I buy something from out of state and the seller doesn't charge me sales tax, I still owe use tax to California. At the same rate, it's not a higher rate, it's the same rate, but I gotta figure out a way to get that to California. And a lot of people don't pay it. But yeah, it's the same. There's a whole lot of ways that they are technically different on forms and things, but yeah. So this is why this is a problem, and states are reeling about this because they're not collecting the stuff. All right, talk a little bit about Amazon. Again, the Amazon dilemma here, what I call the Amazon dilemma is that Amazon has a state tax department that rivals, you know, most accounting firms, right? They have a whole department that deals only with state taxes. And they have flip-flopped on this issue. Years ago, they said, hey, we shouldn't have to collect sales tax on all these things. And now, they're competing with all these small brick and mortar or small internet folks, and they've expanded their footprint such that they're having to collect, and now it's becoming a competitive thing for them. So now Amazon's all on board to want to change the laws to overturn Whewl and have everybody have to collect because they can, right? They've got this big tax department and they've got the wherewithal. What about me? If I start selling my widgets out of my garage here and all of a sudden they overturn Whewl and I need to start collecting sales tax in 50 states, that's going to put me out of business as a small business. Amazon's got a whole tax department to deal with it, right? You're going to read a lot about tax loopholes. Every time there's an article about, should we be collecting the sales tax, they talk about a tax loophole. It's the U.S. Constitution. It's not a loophole. It's been the law for a long, long time. It's just the circumstances are changing, so people think it's a loophole. Most of the problem that we have is the compliance burden. And let's talk a little bit about the compliance burden here in a minute.
Is there typically a difference in tax rate when it's use tax or sales tax?
No.
It applies the same person?
It's the same rate.
Just who's paying it? Okay.
Correct. It's the same rate.
You're paying, the same person's paying it each time, it's just you're paying.
Correct. Yeah. You're either paying it to the seller or to the state directly. Okay. So again, we've talked about this. Yeah. You will have to have nexus in a state. Okay. Let's talk a little bit about the burden. Okay. This is why this is a pain. Again, another reason why I have a job. So let's start. Okay. Let's go down the list. So let's say you're selling multi-state, or maybe even just here in California. You have to ask yourself first, okay, do I have nexus in a state? So we have to go through the questions of, do I have nexus? How many days? Is it clear that I've got nexus there? And it's not always crystal clear. But okay, so let's say we're dealing with 10 states and we determine that in those 10 states we've got nexus in a few of them and not all of them. Okay, then we have to start worrying about the rates. Okay, do we have to collect just the state rate? Do we have to collect the city rate, the county rates? Do we need to deal with that? Yes, yes, and yes. Okay, but are there some exemptions? Sure, and they may be different in different states. Okay, how do I deal with registration? Now I've registered. Do I register online? Can I send in paper? Who needs to fill out the forms under penalty of perjury? I have my officers sign those. Okay, now I have to start filing. Can I file on paper, electronic? How do I do that? And then last but not least, what are the due dates? They vary. Some states it's due the 20th of the month following, the 25th of the month following. Sometimes you're a quarterly filer, sometimes you're an annual filer, sometimes you're a monthly filer. So you could have in the 10 states that you're filing, half of them could be quarterly, so you're filing every quarter. 1 or 2 of them is an annual filing, and then some of them you're doing enough business to where it's monthly. Yes, ma'am?
So I heard it's the states who will use our federal our annual dates. So if my annual date is not from January 1st to December 31st, say, for example, mine is from May 1st.
A fiscal?
So we use the same physical, right, for different states?
Most states are on a calendar basis, and so most of them count the quarters under a calendar basis. It varies. Again, that's a wrinkle that you can add to it. Yeah, some states require you to file on a calendar basis, even though you're a fiscal filer for federal taxes.
So we still need to be careful about the income and sales.
It's sales tax mostly. The income tax return will follow the federal, but sales tax sometimes is based on calendar. All right. So pain in the neck, right? Okay, and you have to deal with registration. I'm going to speed up a little bit because there's a few things I'm getting to, and I've got at the 10-minute notice here. But again, there's a lot of online resources. There's things out there. There's a lot of information out there. Here are some practicalities. You want to establish a consistent method. Like you don't want to be in a situation where you've collected and not remitted. You want to make sure that you register first. You want to determine when you want to begin collecting and remitting. You want to make sure that you have the nexus thing clear. One of the things that we see here a lot is folks say, okay, I'm going to start filing. And we're going to start filing now. We think we've got nexus now. As of 1/1/16, we're going to start collecting. Great, so we fill out the registration form. When did you start doing business in the state? 1/1/16, okay, great, and we move forward. Then you get a notice from the state. Hey, listen, you've had an employee here for 4 years. You registered an employee here in 2012. That doesn't jive, right? So talk to somebody. Make sure your story consistently makes sense with the state. There might be reasons why you didn't file, and maybe you want to go back and fix something and do some remediation, but just be consistent with the state. Okay. Again, I told you I'd harp on this. Maintain proper documentation. It's key. We don't have time for another stretch break, but that's Zoe. Let's talk real quickly about a few problem areas that people encounter all the time. These are things, again, this is why I have a job. We're not filing where we need to. We have nexus in a lot of states. We've got independent contractors that are busy selling in a lot of different states. We're not filing where we need to. Okay, that's a problem. Often it's discovered on a notice, right? Or it's discovered because your customer gets audited. Customer gets audited in a state and they see that, we bought widgets from Monika's widget company. How come she's not registered in our state? So you may get an audit notice. You're unclear on possible exemptions, right? As I mentioned, there's a lot of different exemptions. They vary from state to state. So you think you're in the medical device area and you know prosthetics are exempt in Minnesota, but they may not be in the other 45 states that impose a sales tax. So you want to be sure you've got the right exemptions. Not keeping proper documentation, very key. And then the last but not least, the biggest oops is this collected sales tax but not remitted. But these, again, these are things I see all the time. This isn't just a, FYI slide. These are the things my clients call me about. Okay, talk real quickly about some things that we're seeing here in Silicon Valley. These are some of the big issues for state tax. Taxability of software and SaaS. I would say every other client that I deal with nowadays is either a software or a SaaS client. It's probably 75% of my clients, in all honesty, because everybody's going to the cloud. And the states haven't decided exactly how they're taxing it, and the states are not consistent, and it's a pain in the neck. Sorry, that's here. Companies sell a cloud-based solution. It can be treated differently in different states. And the rules are changing. So the study we did a year ago might be changing now, and we need to make sure that we keep it up to date. Is it tangible? Maybe. Depends on the state. What is SaaS? How do you spell it? Software as a service? Hello. Even the name alone. We're confusing people. And where is it? To your point, where are we using it? Well, we could be using it all over. So where do we source it? Where do we source that sale? Kind of to your point, where am I using it? So where do I source it? All questions that are a little bit beyond the scope of what we're going to talk about today, because there's a lot of ways we can answer these different things. Okay, Marketplace Fairness Act. The reason you need to know about this is it came to be in 2012. It was the Marketplace Fairness Act of 2012. Every year it has come back. It's a bill going through Congress. The Congress that's doing so much, that's so effective, right? A couple years ago, it passed the Senate. We were thrilled, like state tax geeks. We were like, it passed. I mean, I don't necessarily want it to pass, but what this does is it basically wipes out Whewl. It's Congress's attempt, because Congress can make this law, that they would say, hey, we're going to throw out the Nexus requirement. We're going to get rid of Whewl. We're going to call into question that, and we're going to say, okay, basically, if you have $1 million or more of sales, you have to start collecting everywhere you're selling. So that with that $1,000,001, you're now registering everywhere. Okay, big deal. That would change everything. Okay, it hasn't passed. 4 years we've been trying, hasn't passed. Passed the Senate a few years ago. We were like, maybe something will happen. Boehner buried it a few years ago. He didn't like the president. It's all good. It was interesting. I went to a seminar. So I go to this stuff too, and where I sit in the audience and I'm listening to bigger state tax geeks than me talk about this. And I was at a conference that Deloitte put on in Florida a couple weeks ago, and one of the panelists said, it's interesting because a few years ago, Justice Scalia, he's been getting cranky about this Whewl thing, and we think that that Justice Scalia, he's really going to be open to hearing a case about Whewl, another case about Whewl. I disagree too. But it was interesting because they talked about it like 2 or 3 times. And I thought, interesting. I actually went back on my notes and I was like, which justice did they say that was? I said it was Scalia. Okay, so we're so worried about this anymore right now. But it's interesting, mainstream media touches state tax. But if you read about the marketplace, you'll read about it occasionally. And what you'll get is folks that are like, we should be collecting this tax. Keep in mind, if you're a small business, you probably don't want this to pass. If you sell more than $1 million worth of stuff, and that's not that much. Okay, M&A is also something we find very often here in Silicon Valley. Companies doing M&A transactions. You get Microsoft coming in to buy your small technology company. Okay, if your small technology company hasn't dealt with sales tax, let's call you a small SaaS company. Let's call you a small software company. You've had Nexus in 20 different states, but you didn't realize it. You didn't come to my seminar. You didn't deal with any of these issues. And Microsoft does due diligence. And they say, wow, how have you been handling the sales tax issues in these 20 states that your employees are in? Sales tax? What sales tax? Okay, maybe we'll still buy your company, but we're going to have a $2 million holdback for sales taxes, right? You don't want to be that company. You want to deal with these issues before Microsoft comes calling. And so this is where I do a fair amount of work as well. So yeah, this is a sample client of mine. Take a look at the numbers.
For mobile applications,
I beg your pardon?
is this relevant for mobile applications? Are they considered software or SaaS, or what is it?
It depends. You look at it. You have to look at it and say, okay, what is it? What does it more properly fall into? Silicon Valley's tough because the laws are not written for our technology, and so we're having to put, square pegs into round holes. It's fun, unless you don't like the gray, right? Okay, here's some practical gems. I'm going to wrap up. I promise I'm going to wrap up. Here's some things. Just make sure you document. Evaluate your Nexus situation. This is the key gem. Know what your employees are doing in other states. If you're multi-state, know what they're doing, and think about what you're doing, how that might affect the filing. And know that states are reaching further. They're changing the rules. Alabama just issued a regulation this year. Starting January 1st. And they said, you know what? We don't care if you have Nexus in our state. If you're doing business, if you're selling to Alabama customers, we're going to make you collect sales tax. And we're like, no, that gives me palsy, right? Because I'm like, no, because Quill. And Alabama's like, okay, we issued this reg. Okay, well, a reg is kind of down here, right? It's not the statute. It's down here. It's an explanation. But the governor says he's going to uphold it, the governor of Alabama. I'm like, great. But what do I tell my clients? Do I tell them they should start collecting there? They don't have Nexus in Alabama. Or do I tell them, don't worry about it. We'll fight it later. I'm not sure. Nobody at the Deloitte conference had an answer for that either. But we're all waiting. We're watching. So what they said was, hey, let's wait to see what happens after the first quarter when people are going to file returns or not, and see what happens in Alabama. Alabama, right? But yeah, do I want my client to be that guinea pig? No. Interesting. All right, here's some final thoughts for you. We can help. If you need these kind of resources, I have a, whoopsie daisy. I have a newsletter sign-up sheet if anybody would like my newsletter. We send it out monthly. I don't spam it. I don't sell it. But if you're interested, I'll pass that around. If you're interested, please sign up and I can get you some more information. We do a monthly newsletter. We do a weekly topical blog on some of these things. And if any of you have some additional questions, you want to drop me an email, say you met me at the ASL thing, and I'll do a free complimentary consultation for you. I'm happy to do that. These are some of our clients. ASL is a client, as Mark mentioned, and then these are some of the other folks that we do business with. You may see yourself on there. But yeah, we deal with a lot of Silicon Valley companies. A lot of our clients are tech companies. Also, if you'd like, we've got the technology here, very, very tech savvy here. But yeah, if you'd like to sign up for a checklist, and we have a state tax checklist, some things you should be thinking about as you're thinking about doing your filings. And in summary, this stuff will make you drink, right? It'll drive you to drink. Luckily, I like, a glass of wine or two every now and then. But yeah, states are aggressively pursuing revenue. It's not going to get easier. You're going to have more Alabamas out there that are going to pass these crazy laws that are going to leave taxpayers wondering, well, what in the heck do I do? And they're going to call people like me, and I'm going to go, I don't know. No, I'm going to come up with an answer. But really and truly, some of this is going to be onerous going forward. So, and then know that technology companies have interesting issues. I have a bullet on here that says Congress is getting involved. Maybe. We've got a whole lot of other issues, right? So Congress, they don't get along with the president. Nobody gets along with anybody. We've been looking at marketplace fairness for 4 years. Is it going to pass in my lifetime? Probably. In my professional lifetime? I don't know. I'm hoping to retire before then. I'm still a ways away, so we'll see. And don't try to do this yourself. This is an area that in the 5 sales tax audits I've got going on right now, and they're only dealing with California. They're not even multi-state. They've gotten messed up because they got the wrong answer somewhere down the line because they didn't ask a question that they probably should have asked. So ask some questions. The ASL folks are good resources. I'm a good resource.